Hey, what's up, guys? I want to do some charts on a few names and help some think for yourself on the charts. Um, these are all pretty good companies. I think one of them has an issue that if it gets resolved, it's going to bounce. So I want to start with this tattooed chef. I'm sorry. Um, why did I put this box here and this box here? I'll tell you why. This cross here between the 20-day and the 50-day is called a death cross, right? Um, it's called a death cross because that's a bearish trend. And you see what happened after that. The stock went all the way down to under 14, right? 1348 or 84. So it looks like a cross is forming again here, right? Now you got people out there. I'm not going to fault anybody, but they're always talking about fundamentals. And here you see this. Here I put this little box here. That was the best I could do on these on Weeble as far as drawings. Why did I put that there? It's because there's a gap. On the daily, there's a gap. That is significant. That is significant. Because generally speaking, for the most part, gaps always get filled. Now, if you pull out the chart here, the gap is clearer, right? So I think this will help you if you want to learn technicals, okay? Generally speaking, many of your technical analysis call this 20-day, this yellow line, home base. Why? Because when you're this far away from home base, you're extended. And look at your RSI down here on the bottom. You see how this is curled up? Yes, they had a good day. They had a good day for sure. And there's people that like this stock or this company. They think it's going to be another Beyond Meat. But the odds are, by technical analysis, that this gapped up and now it has to come down to fill this gap, right? And now you got guys out there, they don't give enough disclaimer on the advice that they give you. You guys, you younger guys, you really have to stop saying, I think the stock is going to do this. I think the stock is going to do that. And if you wait and if you do this, you're not a financial advisor, and you could get in trouble if somebody loses their money, like buying this up here, and then it drops down. And they say, I followed his advice or her advice. Okay? You should learn technical analysis along with your fundamentals. And you could say, we got a gap here. It looks like the gap needs to be filled. Now, the golden cross and the death cross, what I was trying to explain earlier. This was the death cross. What did it do? Fundamentals, followed the stock. Your big traders, the guys with the big account, your institutions, they look at this stuff. All right? They look at it. So you should be looking at it. This is your daily chart. It's the most looked at. You had a really big gap up here. But I think they're going to either eat time off the clock and go sideways and bring this down to fill the gap. And along the way, the 20-day will cross upward of the 50-day. And it'll bring this chart into a technical support, and then likely, so you're if I could draw freehand on here, I would, but I can't. So your stock went up here. I think it's gonna do something like that. Now I'm going by the technicals, and I'm not a financial advisor. You should not be doing what I tell you. You make your own choices. Look at down here on your RSI. Look at this candle up here. The RSI was low, and they started buying, right? And these are the daily candles. When your RSI reached this peak here, at what, 2132 or something, what happened? They corrected the RSI, they brought it down. They bounced it off the 50-day, which is fine. But these institutional traders, they're not in this thing to lose money. They're not in this thing to get you to prosper. They bring money in for their clients, and some of them actually work for banks, and they have almost unlimitless money to trade with. So I do like this company. I'm going to keep an eye on it, and I'll tell you, if next week they gap this thing down really hard, really fast to $20.34, I'm buying. I might start with just a $50 trade, but I'm buying. Okay, so that's it for TTCF, Tattooed Chef. Okay, now I want to go to this one. One of you young guys put out videos out there, and you said that ARK is investing in this. So I got a starting position, 15 shares. What's my problem with this one? And what should be your problem with this one, looking at the chart? You really should know this stuff. You really should, just for your own good. What did they do back here? Look at your RSI down here on the bottom. See how high the RSI is? Here's another tip for you. This is your 20-day moving average. This candle here back in October was this far away from the 20-day. What did they do? Without breaking the chart, in other words, without doing a death cross and without going below the 20-day, they allowed it to drop, or they shorted, they reversed, whatever they did, as let's say as a trading community out there with the big money. They're the ones that move the stock. We don't. The only way we can move a stock is to buy something and it triggers an algorithm and it'll drop to cause you to shake you out of your money. So what did they do? The RSI went more reasonable here. They brought it down to the 20-day, right? So in my opinion, this is not advice, but my opinion, this is too far away from the 20-day. I'm sorry, this is the weekly chart. Oh man, scratch a lot of what I just said. It still is far away from the 20-day. There's a lot of ways to bring it back to the 20-day. You can go sideways and trade in a range here, right? Eat time off the clock. I guess it hit an all-time high. Where's your 52-week high? Yes, it did. All-time high. My expectation, this is a blank check company. So they almost have unlimitless money. And they invest in startups and things like that. They're really a middleman for money. So my expectation is for them to bring this down. And if they do bring it down, I'll be buying the dips. If it stays above the 20-day, I'm going to be happy with this stock. But it's a long-term thing. I'm not looking to day trade it really hard. And the other thing I want you to look at, this candle, that candle is significant, okay? This candle is significant. This is, I think, a bullish engulfing candle. It would be really a bullish engulfing candle if there was no wick on the bottom, right? This candle is known, I don't know if they call it a doji, I forget what they call it, but when you have a wick on the bottom and a wick on the top and a T-shaped candle, that's indecisive. So they push this thing up, and a lot of your institutional day traders, they made their profit and they got out, and they kept a position probably, right? But they're looking at the technicals and they're thinking, on your daily chart, this thing is a little too far away from the 20-day. See what they did here? They brought it down to the 20-day in a 3-day period. Okay? So, but if you look into the company, I think one of the younger guys said that ARK Investments is in this thing. So that's why I bought it. But I only bought, look, I only have 15 shares. Palantir. I am worried about this stock, but I also observe what the big investors do. What they did on Friday is to say, we're not pumping it up yet. We're not shorting it. We're not pulling out. If we got in down here, say, we're holding and we're eating time off the clock. But look what it did. Let me show you another indicator. It lowered your RSI down here, right? That's called relative strength index. What I don't like on the daily is this death cross here. I don't like that. It's not that far away. It's not that drastic. And this stock does this. It's like a wait and see thing. And then sometime they'll trade on news. But I want to show you a pattern on your chart. I left this one here because it's not intrusive. When you see that line there? Let's lock that one. Let's draw another one, right? I'll bring this one to here. Hopefully you can get it. Okay, good. Now look at the big picture here. In the technical analysis department, this is called a flag. What has to happen with a flag? And look how everything is close to the 20-day. So this is what I call decision time for the chart, for the stock. That's a flag. So with a flag, generally speaking, you see a narrowing of the range here, right? I put this line here as the sort of the low, a support line for this area of trading. Even way back to here. This is where they popped it over. But notice this candle here, how far away from the 20-day. And they brought it down here. They got it close to the 20-day, and they bought it up. They're eating time off the clock here, but they formed a flag. You can call it a bull flag, a bear flag. I don't care what kind of flag you want to call it. It's got to do something. My suspicion is that it's going to go up. That's my suspicion. I trade this as a day trade, and then I get out because I don't trust them. But if it dips down really fast Monday and holds the 20-day on my daily chart, I might jump in. If I take a little loss on a day trade, I will. If I can ride it up, I will. So that's Palantir. Oh, I closed the wrong one. Okay, this one. I was listening to some young guys that said ARK Investment just got in this trade. Now, I got in on this, could be back here. So I have, I'm doing pretty well with this one. It jumped over 8, and that's a psychological number, right? It's a round number. And I might have bought it back here. Let's see. This is, I think I did get it back here. I watched the 20-day. Here's the other thing. I want to show you this. This is important. Why else did I get into this trade? You see this box that I made for you to look at? I wish I can get out of it easier. There's a gap. And I think there's a lot of evidence out there. There it is. There's plenty of evidence out there. See the gap? That gap is going to get filled. But what am I thinking when I see that gap? It's got to be filled in the up direction. If you look at the Disney stock, I believe it's having trouble going up because there's gaps that need to be filled down at $168. That's why I'm not in Disney. I see them go down to 168 and fill that gap. I'm all in with both hands. So this gap, I believe, needs to be filled. And I don't know a whole lot about this. It's like a fish farm, I think, pretty sure. And the fact that ARK got in there, So it's got a pretty strong RSI, but look at how much above the RSI it went over here. Also, I want you to notice it got away from the 20-day. It came down, home base. It rode home base for a while, and boom, it went up. Now that it's above 8, my hope, which you don't trade on hope, I hope you know that, right, is over time, this will end up being a $10 stock, and then it'll start another trading range. Okay? So that's, I call it AQB, but it's Aqua Bounty Tech. All right, this one. Why did I get involved in this one? And what are my worries? I got involved in this one when I learned about ARK Investments. They're very smart. Kathy Wood is very smart. She's got a lot of young, smart guys and girls, a smart team. And this is an ETF. FinTech. Look into FinTech. What is it? It's like PayPal. It's disruptive. It makes peer-to-peer. I can send you money without going through my bank or writing a check, right? So way back here, it was under the 20-day. They went above the 20-day. And this was an entire market correction here. And it went down, and it bounced off the 50-day, right? Went above the 20-day, down here. This was probably some kind of shenanigans in the market. Let's see, this is down. This is November 10th, right? I made this trend line. You don't have to bother with that. I think it keeps bumping into this and then dropping. Okay, it's a good ETF. What do I do with this ETF? I don't really day trade it, except maybe on my, I have a Robinhood account, right? So, on dips, I might buy 1 or 2 shares. And then when I have enough and I look at the chart and I say, whoa, look how far away from the 20-day this thing is. I'll sell those few shares on my Robinhood account and then wait for a dip and then buy them again. So, here's the 20-day back here on December 10th. After this Santa Claus rally, my expectations on this is not financial advice, is that this thing is going to get closer to the 20-day. There's several ways they could do it. They could sell shares, change positions, whatever, bring it down while they're eating time off the clock. But when it hits the 20-day again, it did it here at 46, right? What you also can do with an ETF like this, a strong ETF, I believe it's at an all-time high. See? It reached an all-time high. You could treat this like a 401k and buy the dip. And over time, unless Kathy Wood gets stupid and her investment team gets like out of the woods, and if you look into that company, look into ARK, A-R-K, you'll find that they've made good decisions and they made their investment company very, very rich. So if you're not into day trading and you want to be safe, you can treat a stock like this like your own personal 401k. And you can, over time, like every week, try and find dips, but it doesn't matter. Why does a 401k work? Because you're putting in a little bit of money at a time. And it sort of supersedes the daily market trend because you're going to end up buying it low. And over time, like let's say this thing over time, I expect it to be 100 one day, right? So over time, it'll be 100 and it'll be like, that's what they do with the 401ks, okay? So look into ARKF. It's ARK Investments FinTech ETF. I like it. They have other ETFs, but this one to me is the safest, so this is the only one I deal with. I might day trade some of the other ones. All right, well, I guess that is all the stocks I wanted to talk about. This one is risky. Don't forget the PLTR. It's risky. If some of these day traders get their way, this flag that I showed you, it's going to end up going up and maybe start trading at a better level, more comfortable level. NIO. Did I do NIO? I don't think I did. That's the one I closed out by mistake. Okay, let's go to NIO real quick. All right. So NIO, I made 2 videos on NIO, and I told everybody I was a little worried. And then the same day, I put out another video and said, I'm impressed. What did they do? After here, they brought it down. Instead of stopping at the 20-day, they dropped it below. And they got a lot of people worried. Why? Because they diluted their shares. What they did was they sold some shares at, I think it could have been 46, I forget. But they raised money by selling shares. So what does that do? It's called dilution, right? But they put that money into more plants and more charging stations. The investors over a period of time here liked it. They liked that. And now they got the stock. On Friday, they had a nice pop up here, but they took profits. What did I tell you about the candles, right? Like, this is a hammer. This is the day I put out the video, and I said that I am impressed. I was worried here. I'm impressed because this is called a hammer. That's a bullish. Not only was it bullish, but it was over the 20-day, right? They popped it, with while Tesla did all its stuff, they popped it and they took profits, and they will probably, I don't know, nobody knows, and nobody can tell you they know. So, but on the daily chart, I like it. I like it. 1, 2, 3, 4, 5 bullish days. They're not driving the RSI drastically to the upward, right? Your MACD right here, that's another thing you might want to look into. This MACD crossed here in a negative trend. It's getting ready to meet and do a positive trend upward if they follow what they're doing. And look at down here. Here's your volume candles. Nice and strong. I like NIO. I'm not in NIO. I got out when they were having trouble back here. I wanted to get in early. Getting in early is dangerous, in my opinion. My opinion, not advice. So here looks safe. I'm thinking NIO is going to go above 50. Nobody knows for sure, and nobody should say for sure. But it's looking to me like they want it over 50 permanently. Permanently. So that's what I believe about NIO. NIO's all-time high, 52-week high, is a recent high of 57.20. All right? So I like the chart. You need to learn charts. These guys out there that are just telling you about fundamentals, let me tell you something. It's called fear of missing out. There's a psychological trend in your markets, and you get afraid you're going to miss out, and you buy at the wrong time, and you don't put a stop loss and save your, protect your money. And you can lose a lot of money because fear of missing out is what drives particularly investors that run on emotion. See this MACD down here? I like that. I like what's going to happen. This to me is getting in early. Unless the trend, this here's a downtrend in your MACD. Learn your MACDs, right? The other thing is when the market reaches a place of euphoria and people keep buying and your big investors are looking, like let's look at the SPY. Here's your SPY, right? Friday, they made it look like they were correcting the market, right? And my view, from what it looked like, especially with what they did to DraftKings and some other stocks I'm in, they did the same thing that back here. They dropped it hard and fast, and a lot of people got out of their positions, which is good. I mean, I have no problem with it. That's safer. That's safer than holding and having to wait 3 months to recover your money because of the shenanigans that the market puts you through. Why did they feel comfortable with dumping out the market? Well, the government was arguing. You had gridlock. We're not going to get a deal and all that nonsense. And they play on that stuff. But they knew they weren't going to break the 20-day. We're in the midst of a what they call a Santa Claus rally, in my opinion. And they may go to another all-time high. So we'll see what happens Monday. Always be careful. Always manage risk. Always manage risk. What I do on my Interactive Brokers account is I don't put my orders out there, but I create an order. And I click Save Order. Now you can't do that on Webull. But you can hold an order, getting ready to execute an order on Webull, and you could also do it on Robinhood and watch a ticker. Like, I love Webull. They should be thanked because you can have the SPY up on one computer or on a and another stock that you're watching, and a watch list, and all kind of things. And they provide all that stuff for you for free. When there's others that want to charge you for everything. So, anyway, what was I getting at? It's all psychology. And if somebody got completely out on Friday, nobody should blame them for that. They're protecting their investments. So, what did they do at the end of the day? They brought it back to 70. It's only $1.15 below the high of the day. They were doing a fake out, in my opinion, anyway. And Tesla was in there just screaming. Tesla entered the S&P on Friday. So learn all this stuff. Don't just be lazy and listen to these young guys that, oh, well, I looked at the fundamentals and it's a good company. Unless you can wait, unless you can invest and wait, and you can handle that kind of psychological pain, then by all means, do what you want. But you got to understand what fear of missing out is. FOMO. You got to understand these charts. I don't like the SPY being this far away from the 20-day. But I think they use the government problems as an excuse to get it closer to the 20-day. To me, it's home base. Well, thanks for listening. I ate up enough time. And I hope you press like on the videos. That'll help. I'm not one of these guys that is making money off of this stuff on YouTube. And I don't have a group. I think maybe I would like to start a group. Or one of you guys out there that has a group, maybe invite me in and I might maybe do some charts for other investors with your group if you want. Thanks for listening. God bless.